Hi, I'm Peter Jones, Chartered Surveyor, author and property investor. And I had a great question a few weeks ago from one of my mentees asking about what I thought about George Osborne's attack on buy-to-let and his proposed changes that have come out in the budget last year and the autumn statement. So let me start by dealing with the increase in stamp duty. Well, as you probably know, that from April, when a buy-to-let investor or somebody buying a second home buys a property, they'll have to pay an extra 3% in stamp duty. So if the property is at a value which is currently less than the stamp duty threshold, they'll pay 3%. If the property would have attracted 1%, they'd be paying 4%, and so on up the chain. What do I think of that? Well, it's inconvenient, but it's not really a game changer in my opinion, because the way I see it is, it's just a cost of doing business. If you think about it, for years, property investors have been very happy, for example, to pay a sourcer or a finder a fee, and that could be 3%, 4%, 5%, depending upon the size of the property and the size of the deal. Paying extra in stamp duty is inconvenient, but it's just another cost of doing business. And if you think about it, if we're in property for the long term, and if we're going to hold our properties for, say, 10, 15, 20 years or longer, which we probably should be, then depreciated over that period, 3% extra on the stamp duty is probably not going to make a lot of difference. Now, the thing that does make a big difference is the changes and the proposed changes to the way that interest relief is going to be handled. Up until the changes come in, basically all of the mortgage interest that we pay on our buy-to-lets can be offset against rental income, but that's going to change, and I'm not going to go into the details now. It's quite complicated and it's over a period of time, but I'm sure that if you know about this, you've probably read about it. What do I think about that? Well, that probably is a game changer, because it's not just about the interest relief on the rent. It potentially can push people who are currently lower rate taxpayers into a higher tax bracket. So if you're worried about this, you probably do need to be talking to your accountant. Now, a word of warning on that: not all accountants are the same. You need to talk to an accountant who knows about property, ideally an accountant who invests in property in their own right. For example, if you wanted a knee operation, you wouldn't go to an ear, nose and throat specialist. If you wanted a brain operation, you wouldn't go to a foot specialist. You need to talk to somebody who knows what they're talking about. If, to use a legal analogy, if you wanted a divorce, you wouldn't go to a commercial property lawyer. You need somebody who is niche and who knows all about it. So find a good property accountant, because it's not just about the buy-to-lets. They need to look at your overall financial position. But there are some basic rules that we should be thinking of. The received wisdom at the moment is that property purchases going forward should be into a limited company. Why? Because the limited company will only attract tax at corporate levels. Corporation tax is going to go down to 18%, but as things stand, unless there are changes in future budgets, a corporate entity, a limited company, can still offset all of the interest. Now, if you've already got properties and they're not in a limited company, what do you do? Well, if you've got maybe just a few properties, and if they're lower value, it may be worth moving your properties into a limited company. Now, I'm not saying that's necessarily going to be easy. If you've already got buy-to-let mortgages, and you probably have, or else you wouldn't be worried, you'll probably have to remortgage the properties, and there's only at the moment a limited number of lenders who will lend to limited companies. Will that change? Well, probably, because if the buy-to-let lenders want to thrive in the years to come, then they're going to have to lend to limited companies, because most of us are going to be buying through a limited company. If you already have properties and they're higher value properties, or if you've got a lot of properties, it may not be cost effective or tax effective to switch, in which case you may have to think about other means. Obviously you want to make your portfolio as efficient as possible in tax terms and in terms of collecting rent and so on, but it may be that we're just stuck with what you've got. And I know that some landlords are selling already. Now, to me that smacks almost of being a little bit panicky, but I know that some of them have already run the figures. They've looked to see how the situation's going to look in 4 years' time, and they've decided they don't want to risk leaving it, because there's probably a lot of landlords out there yet who haven't really woken up to the consequences of this, and when the changes come in, maybe there will be a rush of landlords trying to sell their properties, and so maybe now is the time to sell if you're thinking of selling, so that you're not selling against the competition. In my heart of hearts, I don't know if that's the right answer. It may be for some, it may not be for others. but I hate the idea of selling just because events are forcing us to, unless we can use that money that's generated through selling to generate even greater profits perhaps in other ways in property. But for me, it just goes against the grain, really. Quite often things don't turn out to be quite as bad as we think they're going to be, or we find a way around it. But that's got to be a choice or a decision that you've got to make. So the answer is, I don't know. A lot of people don't know. And of course the big uncertainty going forward is, what's George going to produce in his next budget? We don't know. But if he's trying to create a situation where buy-to-let buyers are being pushed out of the market in favour of owner-occupiers, I can only assume that he's going to come up with more and more measures to try and make that happen. We will just have to see. Anyway, I don't know if that helps or not. There's not an awful lot I can say, to be honest. I'm not an accountant. Please speak to your accountant. But also, keep watching the forums, keep talking to other landlords, just keep in the loop, because as a body, landlords are usually very adaptable, and I'm sure that we'll find ways around this.